Hey folks, and welcome to this video. In this video we are going to discuss the pools algorithmic trader. It's a really interesting algorithmic trader because it's doing some pretty cool stuff. It's paying attention to pools of liquidity and it's cascading orders in and around these pools of liquidity, often referred to as supply and demand. So the algo trader is pretty much based on the supply and demand indicator we use and love, and I mean it's a very phenomenal tool. And you can see, here for example, the robot would place some orders through this 4-hour area of supply. We would have probably got filled on the first one only, but would already be up to about a 2 or 3 to 1 on that trade alone. So it's a really exciting project and I think you'll all like it. So let's just have a quick look at the configuration. So we have the product key that we put up here. This will be updated every month, just like the supply and demand software, but the key will be different than the Pipnotic software. Then we have slippage, max spread, and we have the time frame. The default is the 4-hour, and this is to help kind of move away from the noisy small hour areas of supply and demand, because essentially you want to move far enough away from the noise so that you can put these trades on with a nice calm feeling in your stomach and go to bed with these orders in the market. And I find that the 4-hour and up can facilitate this, which I really like. Okay, we have risk. Currently we are using we have tiny risk. So if let's just focus on this. If this was 1, that would mean 100% of the account. Okay, so we're working in decimals here. So 0.1, that's 10% of the account. 0.01 is 1% of the account, and 0.01 is 0.1% of the account. The default setting will be 0.1% per trade. So if you have a batch of 5 trades, for example, once it's opened, all of those trades and the stop loss is enabled, you will have a risk of 0.5% if the stop on all of those trades is hit. So pretty reasonable, but you have to start small. If you go in there and you start putting 0.1% of the account, you open 2 trades and you have 20% you can lose if your stops are hit. So you have to be really careful. And I really emphasize this. Go small initially, and once you feel comfortable, then you can gradually increase risk. But I wouldn't increase risk here in the position size. I would increase risk in number of pairs that the trader is allowed to trade. Okay, cool. If this value here is set to 0, the algo trader will look to this value and make static allocations per trade. Okay. Okay, super. We have here the max positions per pair. So a batch of trades is going to be 5 trades. So it's going to look at, let's say, the euro American dollar. It's going to find an area and it's going to dump 5 orders in the market on the euro US dollar at an area of supply and demand. Max positions per currency. Let's say we are trading a euro USD. Now, according to this setting here, we have 10 orders that we can use on the American dollar left. So you could have another batch of American dollar Japanese yen and another batch on the American dollar Canadian dollar. And so that in total will give us 15 positions where we have 3 batches of 5 trades on those 3 currency pairs. I hope that was clear. So this is essentially just to help prevent overexposure to any one currency. We have distance between positions. This is in pips. Delete pending orders. This is simply a way to flush all the orders on the order books, and I'll show you how to use it in just a second. Instruments traded. Here we have a ton of orders traded. Just a second, please. Okay, a little anecdote. At the Green School here, they have a gong, and at 2 o'clock every day they hit the gong, and the whole school has to stop what they're doing. This includes teachers, students, all faculty, people that are having meetings. Everyone stops what they're doing and they have to meditate until the next gong. Number 2, you have to be mindful of the fact that you're coming to the end of the meditation, and on the 3rd gong everyone continues what they're doing. And it's quite funny because at assembly, for example, when the gong starts, everyone stops, even the people on stage stop, and this could be in front of 400 people. It's fascinating to watch. And so there was just a gong that went off there, so I was just respecting that. Okay, good. Here we have filters. Enable the trend. If you want the trend, then you can set this to true. The swing point significant, this is just showing you a low like here, for example. It wants 13 bars to the left and 13 bars to the right in order to make it a valid swing point that we can use to connect our trend line. So we have one here, we have one here. And so it's going to look on the daily chart for two lows. So it wants to see price move up, form a higher low, and it wants to see either a higher high, so an orange dot up here, or it wants the previous swing high, this one here, to have been taken out by this one. If it sees any of those two conditions, then it is essentially a daily trend on the daily chart. And here we have one, a very clear one, on the 4-hour chart. If we focus on this piece of price action here, I have this set to false per default because trends are tricky. So don't focus too much on that. What you could do is you could put this on the weekly chart and trade in sync with weekly flows. That wouldn't be a bad idea at all. But I like to keep it on false here. Positive swaps only, true. We don't want to be paying swaps every day. If you have an Islamic account, then this won't be a problem because interest is neither paid nor taken. So you can just leave this to whatever you like. But if you are paying swaps, then this should be set to true if you want to avoid paying swaps. But essentially, if you set this to false, this is going to trade a lot more. Enable stops, true. This is going to, what it's going to do, it's going to look at this value here, okay, and it's going to look at the time frame that you're looking at. It's going to look at an average of the volatility on this time frame. It's going to multiply that by 5, and that's going to be the size of the stop. And this stop, so this number of pips, is what is used to calculate the 0.1% of the account size. Okay, and the same applies for the targets here, but we have targets at 2 times the volatility of the 4-hour chart. And what it's doing is, if it has 5 positions, every time it opens a trade, the target doubles. So the first position will be 2 times the volatility from the entry. The second position will be 4 times. The third position 6 times, and so on and so forth. So the targets grow for each position that is put into the market, while the stop is static and stays the same. So essentially, you're risking 5% for a much greater reward potential should the trades work out positively. So this is just an interesting little metric here that I wanted. I'll show you as well when we go to the charts in just a second. We have risk reward ratio. This is just the settings that you're probably familiar with using the supply and demand software. Price imbalance release period. This is just another one from that. And then we have number of periods until expiration. I don't like to leave orders in the market without an expiration, because if something happens, it's nice if they eventually expire. And so essentially what it's doing here, it's expiring the order after 24-hour periods. If you choose this and say we're on the daily chart, then it's going to do 20 days. If you go to the hourly chart, it's going to go 20 hours. Okay, and this is a magic number. This is just used so the robot can identify which trade it has opened when calculating risk. Okay, good. So let's turn this beast on and see what happens. We'll go 0.1% per trade. We're going to say go. They're going to go like this. They're going to turn this on. Okay, there they are. Now they're starting to be thrown in. You'll notice here that the position sizes here are much more conservative than some of the previous versions, and this is simply because we want to avoid these enormous positions. We want to ensure that we can stay in the game for a longer period. So if we have a look here, you can see that it found this. Let's just go like this. It found this area of demand, which is qualified, and it cascaded the orders in at 5 pip intervals here, and we have 2 times the volatility of the 4-hour chart. This is 4 times, 6 times, 8 times, and 10 times. Okay, and the stop is the same. So the stop is not changing. It's the same on all of these positions here. And you can either use with or without the stops. Per default, it's enabled, just so you don't lose your shirt. If we go to here, you can see the same thing happening. We have the order levels here and the targets up here. and the stops down here. We have the Aussie US dollar. This is the area that it's trading. The stops are up here and the targets are cascaded down, as you can see. Go to the Euro, CAD. Let's have a look. You can see we found this area here, this is the one it's looking at, and the first order is at the edge and it's moving down, so the targets go all the way down here. So this is what it's doing, and it's trading, of course, in line with the interest rate swaps. So that's all good and dandy. But what I want you to remember is that while this robot can trade very, very well and create enormous returns, you have to be careful because it can also empty your account in very, very, very short order. And so it is my recommendation that you do this on a demo account only. If you decide to put it on your live account, you accept the associated risks with doing so. And to remind you that you are on a demo account, if I put it on this, for example, if I put it on a live account, it's going to give me a warning up here. Warning, this is not a demo account. And this is just to inform me, to make me aware of the fact that, oops, I'm on a live account, and so maybe I want to go back to a demo account. So this is just going to let you know when you are not trading demo. Good. Well, I will leave it at that, short and sweet. If you have any questions, please post them in the pools forum, and yeah, have fun. Elijah and myself will be in the room. We'll be there asking questions, and if you have any questions, please let us know. But I think you'll find the robot very interesting. It's incredibly powerful. We've seen that over the course of the past 10 months. It's been doing very, very, very well. So the robot can do this, but it can also do the opposite. So just be super, super, super careful. And by using the robot, you take complete responsibility for the outcome of the robot. Okay, and I encourage you to read the terms and conditions on the Pipnotic website. I will post a link to this before you turn the robot on. Good. I'll leave it at that. Again, any questions, please post them in the pools channel. Thank you very much for watching.